Hey guys, welcome back to my channel. I am OTJOSH. Now, in today's video, we'll be talking about a higher high, higher low price action strategy. And we also have for the downtrend, we have the lower low, lower high price action strategy. So for the sake of this video, I'll be showing you just the uptrend example, but the reverse is the case for the downtrend. So for you to take advantage of this strategy for a downtrend, just listen to my explanation for an uptrend and then you do the opposite so that we have enough time to put this video. I will not be doing the example for the downtrend. But when I'm showing the live videos, when I'm showing the live pictures, I will be showing examples using the downtrend. So what does this higher high and higher low price action strategy really means? It is a trend continuation strategy. It is not a reversal strategy. In other words, after you see a reversal pattern, you've seen the retest and the continuation, then you should be watching out for this higher high and higher low pattern. Now, as you can see, this is the explanation at this part, at the left part of your chart of the picture. This is the explanation. I will be explaining in this later on. But then you need to understand this part of the picture is the examples of scenarios where the higher high, higher low strategy works, both for an uptrend and for a downtrend. In this case, I'm using the uptrend as an example. Now, even when the higher high, higher low strategy appears, it will not work always. That's why you see that this second part, I put this mark here and here. They will not work in some special cases. So I'm going to be explaining all of that by the end of this video, and I'll also show you some examples of trade I took using the higher high, higher low trading strategy. So let's go back to set the stage for how this higher high and higher low strategy happens. Now, you can understand that most of these strategies, they happen after a reversal or during a reversal in trend. So therefore, if the trend is exhausted, or maybe the trend has run its course, using these strategies may not be productive as it should. Not only this strategy, it's common, it's general with the market. If the trend has run its course, then the market will be getting ready to reverse. So if you are using continuation strategy when the trend has run its course, you will find out that you are entering the market when the market is about to reverse. So in the case, let's say you're buying, you will be buying high instead of buying low, and you will be selling low instead of selling high, and that is something that we want to avoid. So for us to get the right time to trade, we need to understand this part of the picture. So let's start from here. We have a downtrend. For instance, you see this is the reversal. This is the reversal of a prolonged uptrend. Now we have a downtrend. After the downtrend, you see we have this consolidation. Now, when you see this consolidation, you don't trade it, you can't trade the strategy here. But this consolidation tells us something. It, as you see this green candle and this green candle, they have taken away power from this downtrend. So therefore, after we see this consolidation and this breakout, I will begin to watch out for loss in momentum, which is this candlestick. As you can see the arrow pointing to it, this candlestick is already showing the loss in momentum, and then we have this exhaustion candlestick and this other candlestick. Now, I showed you how to trade the exhaustion candlestick in our previous video. You see this exhaustion candlestick, I told you when you get it, you do a put here, you do a call trade here. But in a case whereby we have no key level, this is not the key level for the exhaustion candle. I'll show you what this key level is meant for. But in a case where we do not have key level around, we can use the next one, and maybe there is a key level here or here, then we can trade the exhaustion candle with this, or you just don't trade it in general. Now, after the exhaustion, we know this is the exhaustion based on this wick here and this huge this huge candlestick. We get the reversal. Now we know what this reversal pattern is. This reversal pattern is the bullish engulfing candlestick, which is common and which I have talked about. Now, when you get this bullish engulfing candlestick, what do? I know I've talked about this before. What do? You wait for the next candle to come back here, which is this candle, close at the key at the level, and then you do this trade, right? And I've talked about this in one of our video, and there are some other patterns you can watch out for, like a hammer, like this kind of candle along the line of this trend. You can watch out for those kind of pattern, and you do the continuation. Now, the other kind of pattern you can watch out for is what we now call the higher high, higher low. Now, what is the higher high, higher low? These two candles are forming higher highs and higher lows. I'm going to make it clear. These two candlesticks, here is the first high, and the second high is higher than the first high. Here is the first low, and the second low is higher than the first low. This is what we refer to as higher high, higher low. But in a case whereby you have a wick like this at the bottom that is creating a lower low than this low, then this is not valid. You must have the higher high and the higher low for an uptrend, and the higher high and the lower high and the lower low for a downtrend. Now, since we've talked about this, how we can get the higher high and the higher low, this is the ideal situation. I need you to remember that this engulfing candle does not have to be only an engulfing candle. It can be a piercing line, it can be a double bottom, which is also a reversal pattern. It can be a range, it can be a downtrend, a range, just like this downtrend, this range, and a breakout can be like that. Here is just a change in trend. I use the engulfing candle as an example. So with that said, we've gotten the situation where we can start applying this continuation pattern. Let us look at specific scenarios, how on where we can trade this pattern and how we can trade them. And the first of these scenarios is the demand and the supply. The demand and okay, number one is the demand and the supply zones. Now, in this downtrend, we have a downtrend, we have a reversal pattern just like this. When this candlestick make the retest, you see this previous supply, this you can see that it was a fake breakout. A fake breakout happened here. So these supports still serve as support, right? It's still serving as support. Now, since it's still serving as support, you can see that this particular candlestick is still at the zone of the support. We can say it's still at the zone of the demand, because if you would take this zone, this consolidation, and divide it into two, you will find out that this candlestick is closer to the support than it is to the resistance, and there is space here to go with a call trade. So in a case like this, you can use this as an example. Wait for when price closes here, wait for price to touch the support, and then you do your call trade. The same and exact situation will be happening in a downtrend. Like I told you, this is just an example. Now, in this area, the consolidation area, you should not be using this higher high, higher low when it is like this. What do I mean? Now we have the same exact scenario. We have this reversal, we have the retest, and then we have higher high and higher low. But now you can see that this candlestick is stopping what at where the resistance, or I would say the supply zone. So in a consolidation area, when there is no space for it to go, so you don't trade it. You don't do puts, you don't do call, you don't trade it. You leave it as it is. Now, when you see a situation like this, you leave it as it is. You don't use this. You don't use this strategy. Now, I want you guys to take a moment and look at this closely. Look at it closely and tell me if you are not going to use this strategy, what strategy are you going to use? Now, I'm not going to give you the answer. I want you to leave that answer at the comment section of this video, because it is clear, it is obvious that we are in an uptrend and we have a scenario like this. There is a particular strategy which I have talked about that you can use. So I want you to leave the answer at the comment section of this video after you've finished watching this video, or immediately, if you know the answer right now, you leave it there. Now, in the third scenario whereby we can use this strategy is when there is a key level breakout. Now, you know, there is now a key level breakout and this retest has come back. Therefore, this resistance will be automatically support, and so you get a higher high, higher low. In as much as there is no level here, there is no level here like this, if there is no resistance like here, then we can go up. But if there is a resistance, then we have something like this again, we don't trade. We need to see clear level, no obstruction above. And then the last scenario where we can't use this strategy is this. Now, I didn't put this consolidation. I just put these two candles. Why? When you have two huge candlestick, you don't go for the higher high and higher low. Why? Because like I told you, when you have two huge candlestick like this, the trend has already run its course. So it will be risky to go again, because in most cases it will have to make a correction. It will have to make a correction before it continue where it's going to. So for instance, if you have these two candlesticks like this, yeah, when you have two huge candlesticks, instead of you to do a put trade, you wait for the market from here to come down here, maybe to any key level, and then you get the higher high, higher low. So you can see that the higher high, higher low is best traded generally after a pullback. You need to wait for a pullback to key level, a strong key level, and then you take the higher high and the higher low. That is the best way to trade it. Now, I hope you've understood this. If you haven't understood this, you have to watch the video again. It's a good strategy. Now let's go to some pictures first, so that I'll show you how it works, and then I'll show you some videos so that you get this close to your hearts. Now, this is the first situation. This is the first scenario for the higher high, higher low trading strategy. So I'm going to do this now, and I'll explain what we have here. Now, if you can see, we had a consolidation here. You see a consolidation area here and a breakout, but we find out that this is a fake breakout. Why? Because the market came back down here. It came back here. Now, assuming this was higher high, higher low, this candlestick, assuming it was two small candlestick making the higher high, higher low, then I would have gone with the call trade, so that it's just like my example, but it's not like that. So I waited. You have to wait. Now you see what a double bottom. You see the W pattern. See the W pattern, a double bottom. Yeah, this is it, and this becomes your key level. Now, after the double pattern, which is a strong reversal pattern, this candlestick now acts as a retest to this level, and after that retest, what did we see? We saw the higher high, higher low. You see the higher high, higher low, and then we do our trade where here. Now, you know, I told you at the beginning of the trend, when you see candlestick like this, you can continue with the trade. Now you can see that when you want to talk about confluence, having more than one reason to do a trade, you now have the higher high, higher low. You now have this candlestick. You also have this candlestick. So you can go along with this trade, and you will find out that a good percentage of the time you will definitely be in the money. So I want you to understand, we had a ranging market, which is a loss in momentum, which has removed momentum from a downtrend. We have a reversal pattern, which shows a new uptrend, and this reversal pattern, if you look closely, there is a round number here that is giving it much more volume, you can see the 2 deviation Bollinger Band is also reversing this trend. You can see it. So after the reversal pattern, higher high, higher low, call. Now let's go to our next example. Now this is our next example. Yes, this is our next example. Now if you look at this, you can find that you may say this is an higher high, higher low, but this is not what I am talking about. Let's take a look at these two candlesticks. After we get this, we have an engulfing candle, right? And we have this retest back to this key level. We can do this call trade like I showed you in one of our previous videos. But look at higher high, higher low. Yet we didn't get this. What I told you about this just now, and when you get two huge candlesticks like this, you avoid using it because the trend must have ran its course. So the candlestick went up, but it was too weak. It was the trend has ran its course. There are so many sellers waiting, and then you see it came back down. So when you get these two candlesticks like this, you avoid trading it. Now coming back down, we get another reversal pattern. We had a retest back to key level. In this case, the key level now becomes the middle. You see the middle of this huge candle. Like I told you, the middle of every huge candle is a support and a resistance. Now after this, we have higher high, higher low. Now guess what? This is a huge candle, right? So if we have another huge candle, we shouldn't be trading. But look, you see this candle becomes a smaller candle. In this case, you can go with a higher high, higher low trading strategy. Now if this candle would have been a huge candlestick like this too, you wouldn't go with it. You let it be. It's as simple as that. Okay, now this is yet another example of the higher high, higher low strategy. Now if you look closely, we have this evening star pattern here, and then we get the reversal. You can see this pattern here. In a previous video, like I will always say, I've mentioned this. So this is something that is common. When you get this pattern, a retracement back to the middle Bollinger Band, although it's not really touching it, but you can see that this week here are still showing buying pressure. You have higher high, higher low within these two candlesticks. It's creating a higher low, higher low, higher high, and then you do your call trade. You can take a good entry point from the 1 deviation upper. If there is a round number here, if there is a support and resistance, whatever, you can take your trade here so that you get yourself in the money. Now you see this is like a reversal pattern. This is a retracement. Now you get these two huge candlesticks. You see what I'm talking about? These two huge candlesticks. Now it's in the money, but if I were you, I wouldn't be taking any trade here because this can easily be out of the money, especially when we are in a trending market. So you don't take such trade. And then the last trade would be this. Now you can see we also have a consolidation, and then we have an evening star. This is an evening star pattern. We have a retest with this candlestick, and then we get the lower low and the lower high. You see these two candlesticks. All you have to do, put, right? Put. It's as simple as that. Simple. So this is how we trade the higher high and the higher low trading strategy. Now let's go to some videos. I think I did 2 trades. I did 2 videos. So let me show you how it works on real life. Okay, here is the video. I'm going to show you now. Okay, this is the video. Now let's see how this candle closes. I did the higher high, higher low to the downward direction. So let's see how it closes. Now if you look at the previous candlestick, it is a green candlestick, but even at that green candlestick, is still producing a lower low and a lower high. This is why I did it. So we have this candlestick here, this breakout, this retest back to key level. We have a lower low, a lower high, and then I did a put. You understand? This is why I did this put here. So this is the put. Now, after this candlestick, you can see now that we have this candlestick, this reversal, it reaches back to key level. Now, if you look at this candlestick, it is part of one of those candlesticks I told you about on how you can trade the reversal pattern. You can also go with a put trade here, but that is a discussion that I have already talked about. I wouldn't want to go back there. If you want to see that video, just go back to the video at my videos, or I'll be leaving the link at the end of this video at the side this part of the video, so that you just click on it and go back to watch how you can do continuation pattern by seeing some specific candlestick patterns. So that is that for the downtrend. I'll show you the next video for an uptrend now. Okay, now this is what we have for an uptrend. Now, as you can see, this is also a consolidation, a breakout, a fake breakout forming an evening star, or a piercing line pattern and a continuation. Now we see a retest back to key level. You can see higher high, higher low. Can you see that? Higher high, higher low. You can do this call, but I wouldn't do this call. Okay, I can do this call because there is still space between here and this level that is forming a resistance. But after this, we still see a breakout. After this breakout, higher high, higher low. After this breakout, higher high, higher low. And when you get something like this, let me show you what I did. Okay, as you can see, I did a call trade because of the higher high, higher low. So let's see how this one is going to end. Let's wait and see. Okay, we still have some few seconds left to see if this strategy is worth trying. If you think it's worth trying, you can give it 20 attempts, and then out of your 20 attempts, you can see the win ratio of your first batch of tests. If you're winning 15 out of the 20, or you're winning 14, fine. If you're winning anything above 13 or 13, you have a good win ratio, and this is a strategy that you will be able to use and rely on. So you see what happened here. We got that trade also in the money. So this is how the higher high, higher low strategy works. So traders, if this is your first time, please do it to like, share, and subscribe to this channel. If you haven't, you can get the ebook to understand most of these concepts. You can get the ebook for that. And for the Telegram signal group, I was having issues with it, so I had to suspend it for now. For those of you who wanted to join, I won't be going on with the Telegram signal group for now, because I'm thinking of introducing other forms of trading like forex and cryptocurrency, where I'll be giving signals whereby we can use stop loss and take profits to make it much more easier to trade. Because for binary option, I noticed that the entry points for binary option can be tricky, and sometimes not everybody will get the same entry point. But for forex, it will be easier. So I'm still working on that, and I am also trying to create the course whereby I will be putting down the algorithm. I'm not talking about strategy, I'm talking about the algorithm of the market, how the market truly works, who owns the market, and those who run the market. Once you understand this thing, then you will be able to form any strategy on your own. And this is like something that no one will ever tell you, because if they tell you that, maybe they feel the money in the market will be enough for them. But I can tell you, this is what I'm planning on to do. When I make that course, I'll be announcing the release to those who are interested in getting it. So like I said, if this is your first time, please do it to like, share, and subscribe to the channel. So until our next deep explanation video, I want you to have a wonderful week, and bye bye.